To make consistent money trading stocks, you need a trading strategy that's repeatable, systematic, and also simple. And in today's video, I'm gonna break down the trading strategy that's made me over $16 million in verified trading profits. It's made me more money than any other pattern, and it's so easy that most traders completely miss it. So what you're seeing here is a trade example that I'll be breaking down at the end of this video. And it's also the exact same trading strategy that made me over $668,000 in one day. We're gonna break down the 5 steps to a first red day now. So what you're seeing here is a trade example that I'll be breaking down at the end of this video. I'm also gonna be sharing the exact trading strategy behind it. On this trade alone, I made over $668,000 in one day. We're gonna break down the 5 steps to a first red day now. But first, let's get into why this works. Most big runners don't die on the way up. They die the first day that they turn red. That's when the crowd gets trapped, and that's when the real money is made. I'm not talking about guessing tops or fighting the trend. I'm talking about waiting for the market to show its hand, then striking with precision. Here's what the stocks look like. They trend up and trend up and trend up, and the first day that they go red, they just tank down. The reason why these stocks fail is because most of the time they are pump and dumps. There is no real news and no real catalyst behind the move. So after the hype dies down, the price does too. When I first started trading, I tried buying chat room pumps, buying the breakouts, using a ton of different indicators, and buying right when the news came out. And all of these things failed because I had no strategy. I was doing a bunch of random things, and it's no surprise I was getting random results. There was no edge in what I was doing. But enough talk, let's get right into the system. I promise that if you follow this, you'll be able to change your trading forever. Let's get into the 5 rules of a first red day. Rule 1 is identify the parabolic move. Look for a stock that's gone up multiple days in a row, ideally with increasing volume. The bigger and more emotional the run is, the better. You want the crowd hyped. You want grandma, grandpa, and the UPS driver buying the stock. You want endless amounts of FOMO. You can see that in this example, the stock starts at $2.43. Volume increases exponentially, and then it goes through around $7.89. That is a parabolic move. Check out this example on TGL. It went from $4 to $58, and the first day that it went red, it collapsed. Look at OCG, ran up from $2 to $19. The first day it went red, it collapsed 80% in a day. Look at this example on DATS. It went from $70 all the way up to $180. The first day that it went red, it went as low as $126. And then it did it again here, $80 to $170. The first day that it went red, it collapsed 50% in a day. Rule number 2 is you want to wait for the first red day. Do not short into strength. Do not try to be a hero. Wait for the first day that the stock is going red after its run. When the crowd starts to panic, that's when the momentum shifts. Look at this example of SMCI. It went from $33 all the way up to $100 a share. Green candle, green candle, green candle, green candle, green candle. The first day that it went red, it collapsed from $107 down to $80 in a single day. Rule number 3 is wait for confirmation on the intraday chart. Drop down to the 5-minute or the 15-minute, or you can even use the 1-minute. Look for a failed morning push, a lower high, or a clear shift in momentum. That's going to be your confirmation. Do not anticipate the move. Let the market prove you right. Look at this example on TGL. It ran up from $4 to $58. The previous close was somewhere around $26 to $30. What did it do? This yellow line is going to represent the red to green area. You could see that when the stock broke through the red to green, it had a minor bounce and then continued to fail. That area went from support turning into resistance, and since then, the stock has lost a ton of value, going as low as $10 a share. So you could see that when you get the confirmation, the stock just unwinds. I'm going to show you a real-world example of me making $600,000 on INDO doing this exact same thing in just a second. Step 4 is you want to set your risk and your target. Your stop goes above the high of the day or the failed breakout. You want to target at least a 2-to-1 risk-to-reward ratio or the next major support. You got to take partial profits as the move works in your favor. Do not get greedy on the stock. Step 5 is don't chase. Repeat only when all of the rules align. If you miss it, let it go. The setup happens over and over again. Most people lose by forcing trades. You'll win by waiting for the perfect storm. Now, let's get into the trade that made me over $668,000 in one day. All public and it's all verified. Let's break it down. So here's INDO. You can see that the stock went from $5 all the way up to $85 without a significant pullback. This is a textbook example of a first red day setup. You can see the stock is expanding and expanding without any single pullback. Now, let's go to the intraday chart. You can see that the day before the first red day, INDO closed around $65 a share. Let's draw a line there so you guys can see. So on this example of INDO, what I want to do is draw my key resistance areas. You can see that this stock had a top around $81 a share. Every time it tested that $81, it acted as resistance. So if I know that this stock is closing weak, and I know that this is an extended stock, I want a bounce in the morning to short and adding only when it goes red. So let's hop on here. So you can see the next morning, INDO pushed up towards that $82. It was unable to test it and reclaim that high. That is your first signal that the stock is acting weak. It could not even test that resistance area and it came down. So what I want to do is if I identify that the key support area and the red to green trigger is $64, I want to reserve most of my size to enter when that red to green area breaks. So right when the market opens here at 9:30, it washes out towards that red to green area and then bounces. It creates a lower high. Look at this pre-market support around 71 acting as resistance. So I am using basic technical analysis. Support should act as resistance. So we saw pre-market the stock was holding here and then it ended up pushing and failing. I took a starter on this first initial fail, probably about a third of my size. And then as we broke down through the green to red area, this was my confirmation. I was not anticipating it. And then as soon as it broke yesterday's closing level of 64 and it broke the low of the day, this confirmed the setup to me. I went full size on the stock and the stock completely cratered from $64 all the way down to $30 and I made over $668,000 on that setup. So what did I do? I drew my support and resistance areas. I noticed that the stock resisted the $82 area. I noticed that there was support at $72. So all I did is wait for the stock to bounce into resistance, take a starter, and add my full size when green to red confirmed and the stock broke down. You can see that the stock was so weak, it was halting down and halting down and halting down. So this was a stress-free trade because I added on the confirmation. This isn't a cherry-pick trade either. I've done this over and over again, and so have my students. But even if you copy all of these things, here are some common mistakes that could ruin the whole strategy, even if you're an expert. Here's where most people mess up. They chase too early. They don't wait for confirmation. They oversize before the move is confirmed. They get greedy. If you follow the rules, you'll ignore 90% of the pain. You have no excuses. I want you to win. That's why I'm sharing this all for free. Just subscribe to the channel and watch the next video showing up here. Thanks for watching.